Audio check, 1, 2, 3. Is it fine? Should we go? Hello and welcome to Startup Street. I'm Ritu Singh, and with me as always are Rajaraman and Shruti Mishra from the Mumbai studio. Here are the headlines that we're tracking for you today. More trouble for BYJU'S after Deloitte resigned as the company's auditor along with 3 directors on the board. Sources say the government has ordered an inspection to probe governance lapses last week. BYJU'S denies the report and calls it speculative.
SaaS startup Zendesk acquires Connecticut-based modern workforce management solution TimeShift. Acquisition furthers Zendesk's commitment to offer innovative omni-channel and AI capabilities, powering exceptional customer experiences.
Gaming-focused venture capital fund Umikai launches its second fund targeting $15 million for investments in pre-seed to Series A firms in the gaming and media centers. It expects to close the fund over the next 6 to 12 months.
Amazon Web Services is investing $100 million in a generative AI innovation center to help customers build and deploy generative AI solutions. The program will connect AWS AI and machine learning experts with customers around the globe to help launch new generative AI products, services, and processes.
Bankrupt crypto exchange FTX has sued a former aide to Hillary Clinton and the former aide's investment firm, seeking to claw back $700 million in investments allegedly made with misappropriated FTX funds. FTX said its founder Sam Bankman-Fried was a profligate patron who showed Michael Keeves, his firm K5 Global, and K5 founder Brian Boehm with cash as part of an ongoing scheme to fraudulently use company assets for personal gain.
Well, those are the headlines we've been tracking for you this evening. It looks like India's most valued startup BYJU'S is staring at an uncertain future. Right after the EdTech unicorn suffered a twin blow yesterday with its statutory auditor, Deloitte, and 3 external board members stepping down, adding to troubles for the company battling lenders, lawsuits, and a funding crisis, BYJU'S is now under inspection for corporate governance lapses. Sources tell us that the Ministry of Corporate Affairs had ordered an inspection of EdTech startup BYJU'S last week, citing concerns over corporate governance lapses. When we reached out to BYJU'S, the company said, and I quote, "Media reports suggesting that MCA has ordered an inspection into BYJU'S are speculative and denied by us. We've not received any such correspondence from MCA regarding this and are not aware of any such inspection," end of quote. Now remember, MCA had also ordered a preliminary inquiry last year, and findings had highlighted several corporate governance issues. Also, as informed yesterday, BYJU'S has now appointed BDO MSK Associates as auditor to strengthen governance. So after ED, BYJU'S is now on MCA radar.
Absolutely, Shruti. So only trouble brewing there for BYJU'S. But moving on our special segment, Young Turks at 21, we put the spotlight on Rocketship VC. The Silicon Valley-based venture capital firm has investments across 20 sectors, including AI software, HR tech, e-commerce, and real estate. In a conversation with CNBC-TV18 Shireen Bhan, Anand Rajaraman, the founding partner at Rocketship VC, said that the firm was very bullish and excited about India, especially on those entrepreneurs that can adopt AI. He's also betting big on India's tech space despite the recent consolidation. Here's a slice of that conversation.
You've got, what, about 18 odd investments in India at this point in time, a couple of unicorns as well. What is the data telling you? What are the bets that you're likely to make? And I believe a new fund as well on the anvil?
That's right. Well, we launched Rocketship Fund 3, I think a few months ago. In terms of India, we continue to be super bullish and excited about India. Every big space and country goes through a little bit of ups and downs. India as a country is doing incredibly well. The Indian economy is on a roll. It's one of the few bright spots in the world right now. The Indian technology space is exciting as well. There's a little bit of consolidation that's happening in the space, which happens periodically, and it's healthy for the ecosystem. But at the same time, I'm really bullish about Indian entrepreneurs who can adopt AI and use it to digitally transform huge swaths of Indian industry, and we are looking for companies like that all the time, right?
So which are the spaces that you think that this has the potential to have that kind of transformative impact?
So finance is obviously one, and we had the first generation of fintechs in India. I think we can have a second generation that's more AI driven, more technology driven. That can be super interesting. Food is another. I just mentioned about the food tech company. Agriculture is, I think, is a space that I think can really be transformed by the adoption of AI, and education, which has traditionally been a good a great vertical in India. I think that we will see the next generation of companies in that space.
When we were last speaking in 2016, you were talking about irrational exuberance and what that had done to valuations and how easy money had kept zombie companies afloat. Are you now starting to see, are we in the middle of the correction? Are we heading towards the end of the correction? How do you see things?
No, I think we're very much in the middle of the correction right now. I think basically what happened is a lot of companies, when the easy money was around, raised large amounts of funding. So the companies that did not raise large amounts of funding went out of business quickly. The companies that raised large amounts of funding have long runways. And so they have not gone out of business. They may have done some layoffs, but they still have really long runways. But there are still many companies among those whose business has not really taken off, even though they have long runways and they've raised large amounts of capital. And this is true in the US and it's true in India, right? It's true everywhere. So we have a bunch of companies that have a lot of capital but are in no danger of going out of business right now because they really have long runways, and that is these are the zombie companies that we spoke about last time. Well, we have the zombies back again now that are hanging around, and I think it'll take a couple of years for those zombies to get washed out.
What we saw happen was also that people were willing to put a lot of money behind what was quote-unquote a concept without necessarily having a strong business model in play. And now the expectation is, where is the business model? Where is profitability? I mean, this, even on the investor part, the pendulum swings, doesn't it?
It always does, and it always overcorrects. I think I worry that we might also overcorrect and go too far in the other extreme, because when you have a startup, you very often you have to bet on a dream. Right? And if you sort of impose a business model and profitability constraints right at the beginning, you're going to miss many exciting companies just because they don't have that. I mean, very often there is a startups very often have this J-curve phenomenon where they lose money initially for a lot of time, and then they hockey stick up. That's so if you sort of focus too far on the right hand side and say right from day one you have to be a profitable company, you're going to miss companies with a steeper J-curve, which ultimately might end up being the more important and transformative companies.
Anand, so let me end then by asking you, the thing that excites you most about India as well as the US and this US-India startup corridor that has, of course, now been in operation for a few years now, and this partnership that hopefully will deepen, especially in emerging and critical technologies on the back of both governments coming together. What excites you the most?
What excites me the most is India's deep entrepreneurial ecosystem. I'm seeing these amazing entrepreneurs in India. When I visit India, I talk to the entrepreneurs. It's great to see their ambition. It's great to see the depth of talent and how that has changed over the last 10 years. The US India partnership is amazing for that because we have a great Indian diaspora here in Silicon Valley and all over the US who are ready to invest in India and who are ready to help take Indian companies who have developed very interesting technologies and help them market those technologies in the US as well. Because while India is a great place to develop, sometimes the bigger markets are sometimes in the US.
How many of your portfolio companies have made that leap from servicing India to now servicing the global markets? How many are on the cusp of being able to do that?
No, it's actually a very difficult transition to make. A couple of our companies have made that transition. For example, this company that I told you that is in the AI meat food space, they started in India, in Bombay, and now they moved to the US, right? So I think that transition has to happen as well to address larger market opportunities. So I think there are big market opportunities within India. that you can address by just being in India, right? Things in e-commerce, for example, or in agriculture. There are many interesting opportunities where you can, or supply chain, where you can be in India and build a big company. But if you're building a company that is selling to enterprises, then the bigger opportunities are in the US.
Well, that's Rocketship VC worrying about an overcorrection in the market. But moving on from there, construction material startup Infra.Market has raised $150 million from Varde Partners through the issuance of convertible instruments. Now, Infra.Market, we understand, is looking to go public in the next 18 to 24 months. And this latest fundraise, a part of it, we understand, will be used by the company to acquire a majority stake in Strata Geosystems from US-based Glenn Raven. Joining me now to talk about this is Infra.Market's co-founder, Shouvik Sengupta. Shouvik, thank you for your time here on Startup Street and welcome to CNBC-TV18. If you could start by telling us about this fundraise. The last fundraise you had valued the company at about $2.5 billion. This, of course, is in the form of convertible instruments, so there's no question of valuation yet. But why did you go for this versus equity, and what is your plan for deploying the funds?
So the plan for deploying the funds for us is primarily, like you mentioned, we're acquiring a company in the geogrid geotechnical space. This company works with construction companies and helps them reduce the carbon footprint of their projects, reduce the cost of their projects by using technical textiles in construction, and it also helps them reduce the overall maintenance of a project post-construction. Our target was to acquire this company, and we felt that in the current market environment, issuing convertible instruments gets us the best sort of valuation metrics in the future. I think that's what we sort of focused on. And since we are going public in the next 24 months, this would be the right way for us to strategize our cap table in the way going forward.
But Shouvik, let me come back to that investment in Strata Geosystems. How much of this $150 million are you going to be using to acquire the company? And what happens with the rest of the money?
The rest of the money will be used for growth, primarily. $90 million is what will be go towards acquisition of Strata. Strata India and Strata US, which is the holdco at the moment, and which sort of has the entire global operations.
All right. And you said you plan to take the company public in the next 24 months. Are there certain milestones for the company to meet before that happens? What would sort of be the targets that you're looking at? And are you on track for, what size of an IPO are you looking at?
So we obviously haven't decided the size of the IPO, considering we're still 24 months away. But our track record has been that we are a profitable company in this space. We are close to 100 million EBITDA run rate in this at the moment. We believe that creating a profitable company is in this sector has always been our target from day zero. We've been profitable for multiple years now. And for us, I think the most important focus in the next 24 months is to take this company in a scenario where we are market leaders in at least multiple product categories and market leaders in multiple sectors. I think that is more important for us. So I think we want to show a density in the market, a depth in the market in various product categories. And that is, I think, one of the key criteria for us going public, key milestone, and not necessarily just numbers. It's about us achieving certain amount of category leadership in this industry and being recognized in the industry as a significant player across product categories.
Speaking of being a significant player, Shouvik, we just heard Rocketship VC talk about how Indian startups should look at a more global opportunity. You've recently opened offices in 2 places abroad. Tell us your plans. I mean, outside of in India, do you see an opportunity? How big could it be?
So like I mentioned, even the company acquired Strata has global operations. Almost 30% of the business comes from global operations.
Yeah.
A large part of our business is global, while it is still, India is still a very significant play for us. And we believe the lack of or the opportunity in infrastructure in India is much larger than most of the developed economies. However, India is transitioning to become a manufacturing hub for global clients. And we believe in that India journey. We believe in that, and hence we've set up offices in Singapore and Dubai, like you mentioned. We believe the Middle East, the MENA region specifically, is very accessible through Dubai. And we believe the MENA region is a great place for India to eventually export its products in. Singapore acts as a hub for our global exports in developed markets. And I think Singapore, we've set up global operations almost 1.5 years back. and it is just sort of giving results right now for us.
Yeah, so in the MENA region, for instance, are you looking at more acquisitions beyond Strata? Any M&A opportunities overseas?
M&A opportunity overseas for us right now, we are not. We are looking, see, we want to manufacture in India for the globe, right? So for us, what is critical is having M&A opportunities in India where we can export out of India for global requirements. Whether we will be actually be setting up manufacturing abroad or setting up, global operations abroad for other markets is something we are not currently focused on in our next 2 to 3 year journey. Next 2 to 3 year journey, whatever M&A we'll be looking at will be India-specific M&As who can then, who have a global market reach. We don't want to go out there and set up operations globally.
All right, Shouvik, unfortunately, we've run out of time, but it was a pleasure speaking with you, and thank you for being here on CNBC-TV18.
Thank you for having me.
And on that note, it is time for us to head into a short break. But coming up, SafeEarth, the technology platform for adoption of renewable energy, bags $35 million. What's the fund allocation plan and the growth blueprint? We find out on the other side. Stay tuned.
Welcome back to Startup Street. Safearth, the technology platform for adoption of renewable energy, has raised 3.5 crore rupees in its pre-series A round, led by Anthill Ventures, Third Derivative and Mumbai Angels. The venture has completed over 100 industrial solar projects and has deployed capacity of 171 megawatt and claims to have enabled savings of over 300,000 tons of carbon emissions. To elaborate on the road ahead at Safearth, joining me now is its co-founder, Anuvrat Sabu. Also joining me is my colleague Arundhati. Anuvrat, welcome to Startup Street. First, tell us how Safearth is helping industries reduce their carbon emissions. If you could elaborate on your solar energy solutions and what kind of efficiency and savings are we talking about? Anuvrat, I think you're on mute. If you could kindly unmute yourself.
Sorry. Hi, Shruti. Hi, Arundhati. Thank you so much for having me. So electricity accounts for a majority of emissions that most industries have. Indian industries are using almost 900 billion units of electricity each year. And here at Safearth, we are focusing on this gargantuan problem. So what we do is that we help industries map their their electricity consumption and help them offset it using renewable energy. So the efficiencies like we spoke about, right? So everyone who is buying a solar system today is buying it for the first time and possibly for the last time, because a solar system typically lasts about 25 years. So that means that the average buyer does not have the technical know-how and the financial know-how of how the system is to be installed. So the Safearth platform allows the consumers to buy the right solar system at the right price with the assured performance. We handhold the customer throughout the journey, right through conceptualization to finance to installation. And in the last 3 years at Safearth, we have generated an additional savings for clients of 40 crore rupees. This is over and above everything that they save from solar.
Right. So you've helped your clients save a bit of money. Hi, Anuvrat. I believe the fresh funds raised will fuel Safearth's product development initiatives and support your expansion into new industrial belts across the country. So can you elaborate on these plans? What new geographies are you looking at?
Right. So currently we are just in 4 geographies.
Right.
And the biggest ones being Rajasthan and Karnataka. The funding will help us expand into Maharashtra and Gujarat, which are the largest industrial regions in our country. And a very exciting prospect is also expanding into Africa, where we've just completed our first project. So and on the tech side of things, we are going to use the funds to complete our full stack, which basically means integrating finance, insurance, and other ancillary services on our platform for both the consumers and the construction companies.
All right, so expansion into Africa and, putting in more investments in your tech stack, that's the plan. But, take us through the current business and revenue growth numbers and the revenue models that you've devised for Safearth, and how soon do you hope to turn profitable?
So Safearth has a GMV right now of about 800 crores, and we are growing at about 250 to 300% a year. So, and we were profitable up until last year, but we've invested heavily onto our growth. So now we are just about breaking even. We have 4 sources of revenues. The largest one being the success fee that we get for turning a project. And we have a subscription fee that we charge our vendors and a sign-up fee that we charge our consumers. The 4th segment, and something that is very interesting for us, is the revenue that we are generating from our ancillary services like financing of purchases, insurance of various products, warranty claims, etc.
Right. Anuvrat, why don't you take us through the entire process? How do you map out an industry's electricity consumption and design a solar plant to optimize its energy usage? What's your tech edge, if you could quickly tell us that?
Yes. So we've created a tool that it's a free tool, by the way. So that helps industries manage their electricity consumption. So what it does is that it takes certain inputs like electricity bills, connects itself to a few meters, and maps the entire electricity footprint of the consumer, right? The system then asks for various inputs from the consumer and recommends a system. Let's say it recommends an X system. If the consumer wants to go ahead with it, simply by a click of a button, it can go ahead and host an auction where India's top 50 vendors will then participate and quote for that said project.
Okay.
This is basically what it's done is it's reduced the time for the entire process from 6 months, which is the industry average, to about 15 days. And the biggest thing is that it's reduced the errors and the savings. It has maximized the savings.
All right.
Where we've really made a tech edge, however, is helping the solar construction companies. They're actually the backbone of this industry, and they're really suffering because of reduced margins and increased competition.
Okay.
And SolarFlow, which is basically our project management tool, enables them to do projects at scale and reduce costly errors to an absolute zero.
Okay.
So right now, these projects, multi-million dollar projects are handled on Excel and WhatsApp.
All right.
And we've basically given them a tool to manage all of that.
Okay. And with one final question before we let you go, we need to talk about your market share. You claim to have 6.67% in the CNI rooftop solar space and 5% in India's overall distributed solar market. You now, in fact, aim to facilitate the reduction of 1 million tons of annual carbon emissions through over 1 gigawatt of solar projects in the next 2 years. What makes you bullish? If you could quickly answer that.
Yes. So very simple. Electricity tariffs are going high every year, and it is really pinching in the Indian industries. In fact, there was a protest in Karnataka just yesterday, right? So this is fueling the renewable energy growth at an unprecedented rate of 45%. The payback of solar systems and wind systems are going down every year. And SafeEarth just eases the transition for the consumers. So we are naturally going to have a higher growth rate than the industries. So this makes me very bullish, and in fact, we are very confident that we are going to overachieve on the targets that we've set out.
All right, Anuvrat, many thanks for joining us on Startup Street, and wish you the very best for all your plans.
Thank you. Thank you so much for having me.
On that note, it is Friday and it's time to take stock of all the deals in the startup world. This week saw a total of 13 deals worth $298 million, this according to Venture Intelligence. Some of the notable deals include space tech startup Digantara, which got $10 million from Peak XV Partners, Kalari Capital and others. Burger brand Good Flippin' Burgers bagged $4 million from Tanglin Venture Partners, while B2B marketplace Yarn Bazaar got close to $2 million from Equanimity Investments and others. That's not all. Prop tech company Crib has raised $1.82 million from Rebright Partners, while digital lender Navadhan raises $1.5 million from Anicut Capital, Gemba Capital and others. This year, the startup